Sir, very happy morning to all. So we are going to do a very quick marathon on capital gain and IFOS, my dear lovable students. A very important two topics for the coming examination onwards because of its huge amendments in the capital gains. Yes, the chapter capital gain has been amended like anything. How we are going to discuss? The first we are going to talk about the introduction or the basics in the capital gain. As we all know that there are 5 heads of income. Number 1, income from salary. Number 2, income from house property. Number 3, profits and gains of business or profession. Number 4, capital gain. And number 4 is IFOS. These last 2 heads is our discussion. My dear lovable students, both the heads are predominantly talking about one asset called as capital asset. If you are transferring the capital asset, capital gain will come. If you are receiving the capital asset, IFOS may come. IFOS may come. So to understand these two chapters, one is capital gain and IFOS. Understand what is capital asset is priority. That's what definition of capital asset. That's what definition of. What is capital asset, sir? Capital asset means any property held by an assessee, whether or not connected to his business or profession. That means all the properties held by assessee are capital asset. That means as per the starting definition, everything is a capital asset. If everything is a capital asset, even stock in trade is also a capital asset. If stock in trade is also a capital asset, means if you sell the capital asset, sir, dash gain will come, capital gain will come. It should not happen like that. That's why first part of the definition is having 5 exceptions. These 5 things are not capital asset, my dear lovable students. Number 1, stock in trade. Number 2, personal effects of movable nature. Rural agricultural land. Gold bond issued by Government of India and special bearer bond. These 5 things are not capital asset. Sir, personal effects of movable nature means your shoe, your pant, your shirt, your specs are not what asset? Capital asset. But for personal effects of movable nature is having 7 exceptions. That means these 7 things are capital asset, even though it is personal effects of movable nature. Number 1, jewelry, archaeological collections, drawings, paintings, sculptures, any work of art, bullion, shares and securities, varad. So this is the definition of the what asset? Capital asset. So first of all, an item should be a capital asset as per part number 1. One more part is there, my dear, part number 2. Even this is also a capital asset. Any security held by a foreign institutional investor. Any security held by a. So the assessee is FII, foreign institutional investor, in accordance with the SEBI guidelines. In accordance with the. That means a FII, whether for them security is a stock in trade, it will be a what asset? Capital asset. So for FII, always securities are capital asset and it will never go to PGBP is what our highlight. Are you really with me? And any ULIP, unit linked insurance plan. It should be issued on or after 1/2/2021. First of all, the date of issue should be on or after 1/2/2000, for which the provisions of 1010D is not applicable because 1010D is an exemption. If 1010D is applicable, it is exempted. Once it is exempted, it is not a capital asset. Right, sir? Sir, provisions of 1010D is not applicable. On account of annual premium or aggregate of annual premium exceeds how much? 2,50,000 rupees. So because of the reason that if the annual premium or aggregate of annual premium exceeds 2,50,000, it's a Brahmandamana ULIP. It is not a Sadharanamana ULIP. If it is a Sadharanamana ULIP, then it is exempt under section 1010D. Once it is exempt under section 1010D, it is not a capital asset. If it is a Brahmandamana ULIP, it is not exempt under section 1010D. If it is not exempt under section 1010D, it is a capital asset. Are you really with me? This is what the definition of the capital asset, my dear lovable students. We talked about the definition of the rural agriculture land. You tell me, is rural agriculture land a capital asset? No, sir. Then that means urban agriculture land is a. Sir, what is urban agriculture land? Sir, urban agriculture land is a land which is situated in urban area. Which is situated in? Sir, what is urban area? Urban area may be a municipality, cantonment board, which has a population of how much or more? Sir, Chennai, Greater Chennai Corporation, having a population of more than 10,000 or less than 10,000. That means this is an urban area, not a So if you are having any agriculture land in urban area, it's an agriculture land. Hence, it is a what asset? Capital asset. In the following area within the distance measured aerially, that means, my dear lovable students, here is the cantonment board or here is the local authorities there. Sir, here, from here, they are saying that up to this area also we will treat it as what area? Urban area. Sir, this is an urban area. There is no doubt about it. Urban area சுத்தி பத்தி இருக்கிறது என்ன ஏரியா தான்? Urban area தான். For example, up to how many kilometers? 2 kilometers. So distance from area referred above up to 2 kilometers. If the population according to last census is more than 10,000, because here itself covered 10,000. More than 10,000 up to how much lakh? 1 lakh. Sir, my kilometer up to how much kilometers? 6 kilometers. More than 1 lakh up to how much lakh? 10 lakh. Up to 8 kilometers. Sir, more than 10 lakh. So from the municipality or cantonment board, from here you are traveling to 9 kilometer. That's it. It is not an urban area. It is a rural area. So any land you are having at 9 kilometer distance, then such land is not a capital asset, because that land is situated in rural area. Means any area which is not an urban area. Urban area means any area which is not a rural area. Are you really with me? Yes, sir. So that's it. These are the examples we have already done. So what this chapter is saying, that first of all there should be a capital asset. Have you understood what and all are capital asset? That capital asset should be transferred. That capital asset should be. So there should be a capital asset and you should transfer the capital asset, my dear lovable students. Sir, what and all will amount to transfer? If you are doing 7 activity or transaction, then that will be amount to transfer. What are the 7 activity or transaction? Number 1, sale. I am loving, with interest I am selling that, or I am exchanging, or relinquishment of any asset. So sale, exchange or relinquishment of asset will be treated as transfer. Extinguishment of any rights therein. For example, I am having a capital asset, I am saying that this capital asset is no more mine. It is a transfer. Compulsory acquisition under any law, government is putting the capital asset, then it is a transfer. You can't argue that, oh, I don't love it, I don't like it. Conversion of capital asset into stock in trade. That's what 45 subsection 2. Conversion of capital asset into what in trade? Stock in trade. Compulsory acquisition is what? 45 subsection 5. Compulsory acquisition of land and building. Are you really with me? Or any transaction, you are entering into any transaction which allowing the possession of the immovable property, which help you to get the possession of the immovable property, is a transfer. Or any transaction enabling enjoyment of the immovable property permanently is a transfer. As we all know that zero coupon bond are capital asset. If you are maturing zero coupon bond or redeeming zero coupon bond, it will also be transfer. That means 7 activities or transaction will tantamount to transfer as per section 2 subsection 47. That's why 7, 2 subsection 47. 7 activities or transaction will be treated as transfer. So there should be a what asset? Capital asset. And that capital asset should be, then automatically what gain will come? Capital gain will come. That capital gain may be short-term capital gain or long-term capital gain, my dear lovable students. Are you really with me? Sir, whether the capital gain is a short-term capital gain or long-term capital gain depends upon period of holding. Depends upon that period of holding is explained in section 242A. Period of holding is explained in section 242A. For example, if you are holding more than the statutory limit, then the asset is a long-term capital asset. If the asset is a long-term capital asset, the gain will be long-term capital gain. Whereas, if you are holding for less than the cutoff date, then the asset is a short-term capital asset, then the gain will be short-term capital gain. From here onwards, the real game starts because of the amendment. What 242A, for the purpose of period of holding, the act is asking that, have you transferred before 23/7/2024? That is a cutoff date for capital gain. 23/7. 7 means July. July 23rd. Hello, sir. Have you transferred, made the transfer before 23rd/7/2024 or after 23/7/2024? So, from 1/4/2024 till 23rd of July, we are having one capital gain provision. On or after 24/7, my dear lovable students, 23/7, sir, we are having new capital gain provision. So this I am going to call throughout the marathon as old capital gain provision and new capital gain provision. Comfortable? If the transfer has been made before the cutoff date, can you say what is the cutoff date? 23/7/2024. For the purpose of what of holding? Period of holding, we classify capital asset into three categories. Financial asset, unlisted shares and land and building, other capital asset. Comfortable? For financial asset, period of holding is equal to how much month? If you are holding more than 12 months, long-term capital asset. Less than 12 months, short-term capital asset. My dear lovable students, for unlisted shares and land and building, period of holding is how much month? 24 months. And for other capital asset, 36 months was the period of holding. But after amendment, that is, if your transfer is making after 23/7/2024, we don't have this category. This has been deleted. We are having only financial asset and other than financial asset. Financial asset means period of holding more than 12 months. Other than capital asset, period of holding is equal to 12 months, 24 months. Are you really with me? Sir, what are the financial asset? Question arises. Listed shares are financial asset. Units of UTI, units of equity oriented fund and zero coupon bond. These are the financial asset. So in exam question, my dear lovable students, what first you have to check is whether the transfer happened, whether before the amendment date or after the amendment date. If it is before amendment date, for the purpose of period of holding, we classify capital asset into three categories. Number one, financial asset. Number two, unlisted shares and land and building. Number three, other asset. But if the transfer has been happened after the amendment date, there are only two categories of capital assets are there. Financial assets and other than financial assets. Comfortable? So let me ask you a question. You try to apply and answer me. Before amendment, listed shares, what is the time limit? 12 months. After amendment, listed share, 12 months. Before amendment, unlisted share, 24 months. After amendment, before amendment, land and building, 24 months. After amendment, land and building, 24 months. Comfortable? Before amendment, debenture will fall under financial asset, unlisted shares or other capital asset. Other capital asset. Debenture will fall under other capital asset. So for debenture, the time limit was 36 months. But after amendment, if you are transferring, 36 months concept itself has been deleted. That's what the amendment is all about, right? So the time limit for the period of holding will be 24 months. Clarity? What are the four financial assets? Can you say listed shares, units of UTI, units of equity oriented fund, units of zero coupon bond? That means basically 3 units and 1 share. Are you really with me? That's it. Sir, as per section 50AA, there is an amendment. I will come to 50AA at the appropriate time of discussion. That's it, man. And how to compute the period of holding, I will teach you at the appropriate time, because these are various circumstances. That various circumstances we will be discussing at the appropriate time. Come on. So there should be a what asset? Capital asset. That capital asset should be transfer. Because of the transfer, we will be getting that capital gain, may be either short-term capital gain or long-term capital gain. Comfortable? Whether the capital gain is a short-term capital gain or long-term capital gain depends upon period of holding. Comfortable? For the purpose of what of holding? Period of holding. We have to check that whether the transfer has been happened before amendment date, or if it is before amendment date, capital asset classified into 3 categories. Number 1, financial asset, unlisted shares and land and building, other asset. But after amendment, it is not 3 classification, it is only 2 classification. Number 1, financial asset, other than financial asset. Can I proceed? Sir, this capital gain head is a special head. It's not like salary. Every month you won't get capital gain. Correct. Every month you won't get capital gain like IFHP. PGBP, every month sale will be there. IFOS also, every month interest revenue will be there. But once in a while only capital gain you will get. If you transfer the capital asset, only what will come? Capital gain. So section 48, section is a 8-step approach. This is how you have to calculate the capital gain, my dear lovable students. This is equal to section 29. Section 48 is equal to section 29. Because how to compute the PGBP, we have discussed in section 29. Am I right? Because section 28 is a charging section and section 29 is a computational. How to compute the capital gain is covered in section 48. Section 48 is asking one question. have you transferred the capital asset before amendment data, after amendment data? If it is before amendment date, that is before 23rd of July 2024. Because for our examination, only from 1/4/2024 till 23/7/2024, if the transfer has been happened between these date, my dear lovable students, you have to check that full value of consideration for how much rupees you really sold the capital asset. Less what for the transfer? Expenses for the transfer. Sir, in order to transfer, have you incurred any expenses? You will get what consideration? You can reduce either cost of acquisition or index cost of acquisition or cost of improvement. Or what is cost of acquisition? What is cost of improvement? This we have discussed in section 55 of the Act. Are you all really with me? You will be getting either short-term capital gain or you will be getting exemption under section 54, 54B, 54D, 54EC and 54F. You will get taxable short-term capital gain or taxable. This is a historic amendment in the entire Income Tax Act. If you are transferring a capital asset after amendment date, you are not entitled for the benefit of indexation, my dear lovable students. You are not entitled for the, then the computation will be full value of consideration, less expense for transfer. You will get answer as net consideration, less cost of acquisition, or that means even if you are transferring a long-term capital asset, even after holding the specified period of holding, benefit of indexation will not be from 1961. This is not the procedure. But for our examination, even though the asset is a long-term capital asset, we are saying that you are not entitled to claim the benefit of, so less cost of acquisition or index cost of acquisition. You will get short-term capital gain or long-term capital gain. From that, you can reduce exemption under section 54, 54B, 54D, 54EC and 54F. Taxable short-term capital gain and taxable. So this is a remarkable amendment. If you are transferring before amendment date, you can enjoy the benefit of indexation. But after amendment date, sir, even though the asset is a long-term capital asset, you are not entitled for benefit of indexation, right? For what and all benefit of indexation can be availed? First of all, you have to ensure that the transfer has been happened before the, if it is before the amendment date, sir, you can take for cost of acquisition also indexation can be enjoyed, and cost of improvement also indexation can be. For example, I purchased a residential house property. You tell me, is residential house property a capital asset? Yes, sir. I purchased a residential house property. That is called as what of acquisition? Cost of acquisition, because I purchased. I constructed 2 additional rooms there. Sir, it is called as cost of improvement. How to compute the indexed cost of acquisition? Take the cost of acquisition divided by CII in the year in which the asset is first held by the assessee. That means the assessee means the person who are getting the asset, in which year he got the asset first. Or if that asset has been received before base year, that is on or, sir, before 1/4/2001, whichever is what, later. So you have to take a CII. You have to take a, of the first year of the asset is held by the what? Assessee. For example, first time asset is held by the assessee on 1980. On 1980, we don't have CII. Look at here. Our CII starts only on 1/2. That's why, or 1/4/2001, whichever is. So for any capital asset acquired before base year, always the denominator will be 100, because 100 is the base year. Can I proceed? Into CII of the year of transfer. Generally in our examination, we will get the transfer year as our year, which is 24-25, come to 363. Can I proceed? That's it. With regard to indexed cost of improvement, you have to check how much money you spend. That's what cost of improvement divided by CII of the year of improvement take place. In what year you have incurred the improvement? And the CII. For example, 10-11 you have incurred the improvement divided by 160 into year of transfer. 363 is the CII of the year of transfer. Comfortable? Look at this, man. If the cost of acquisition is before what year? What is the base year? 1/4/2001. Then cost of the asset to assessee or fair market value as on 1/4/2001 will be the what of acquisition. That means any assessee acquired a capital asset before base year, you can take either actual cost of acquisition or fair market value as on 2001, whichever is higher. Sir, if you have incurred cost of acquisition after what year? Base year. actual cost of acquisition will be the cost of acquisition. Comfortable? CII has been given, and I already highlighted that if transfer of capital asset has been happened after the amendment date, which is after 23/7/2024, all this benefit of indexation concept will not be applicable. Comfortable, sir? So first of all, there should be a what asset? Capital asset. So this capital asset should be transferred. Because of the transfer, you should end up with a capital gain. This capital gain may be either short-term capital gain, or it depends upon what of holding. For the purpose of period of holding, you have to check that whether the transfer has been done before the amendment or transfer has been done after the amendment. If it is before the amendment, capital asset classified into 3 category. If it is after amendment, capital asset classified into 2 category. Can I proceed? Sir, how to compute the capital gain is what question? That has been handled by section 48. Even section 48 is answering one question. Is the transfer happened before the amendment or after amendment? If it is before amendment, if the asset is a long-term capital asset, you are entitled to claim benefit of indexation. That is, instead of cost of acquisition, you can take index cost of acquisition. Instead of cost of improvement, you can take index cost of improvement. Comfortable? Whereas if the transfer has been happened after amendment, on or after amendment date, sir, the benefit of indexation concept, we put it on dustbin. We don't want the benefit of indexation, even though the capital asset is a long-term capital asset. Comfortable? This is what the introduction or the basics of the capital gain.